Welcome to the Deep Dive. We're here to cut through the noise in global finance and politics, looking at the source material to figure out, what's really driving things.
And right now, it feels like, like everything's happening at once. You've got this huge tech boom colliding with some pretty shaky government foundations.
Absolutely. It's quite the contradiction we're seeing in the sources. Major U.S. indices, S&P 500, NASDAQ, they're hitting record highs. Bitcoin's on past $125,000. And yet, here in the U.S., the government shutdown is dragging into week 2. How do you even make any sense of it?
Well, the market seems to be making a choice, doesn't it? It's like it's betting on tech euphoria and corporate stuff and kind of tuning out the political drama.
For now, anyway.
Right. So our mission today is really to unpack that tension. We're going to deep dive into 3 main areas. First, the AI infrastructure build-out, the sheer scale of it.
Okay.
Second, some big corporate strategy shifts, especially M&A. And finally, those friction points, both here and globally, that are really testing things.
Okay, sounds good. Let's start with AI then. That seems to be where all the energy is. This new OpenAI and AMD partnership feels like more than just buying chips.
Oh, definitely. It's way more than a hardware order. Think of it as a deep strategic tie-up. OpenAI is committed to deploying 6 gigawatts of AMD Instinct GPUs.
6 gigawatts?
Yeah, over several years, starting with 1 gigawatt in the second half of 2026.
1 gigawatt. Let's just pause on that because gigawatts, it sounds like an energy term, not computing power.
Yeah.
What does that actually signal to you, to the listener?
It signals the absolutely staggering energy appetite of these future AI models. I mean, a gigawatt is enormous power, enough for hundreds of thousands of homes.
Wow.
So this isn't just buying servers, it's committing to the power consumption of like a small city just for AI. It makes that estimated $1 trillion for OpenAI's Stargate infrastructure seem, well, maybe not so crazy after all. It reflects the physical reality.
And the deal structure itself is maybe even more telling than the raw power commitment. The equity part is really interesting here.
Exactly. That's the key bit. There's a warrant in there. OpenAI gets the option to buy up to 160 million shares of AMD's stock.
Which could give them what, like 10% of the company?
Potentially, yeah. About a 10% stake in their main chip supplier.
Okay, so is that a partnership they wanted or one they needed?
I think it's probably both. Necessity, because, OpenAI's president said it flat out. They need as much computing power as we can possibly get. Lack of compute was actually holding back some features they wanted to launch.
Right. Things that could make money.
Exactly. But the warrant is the clever part. It creates this really powerful mutual interest. OpenAI's success now directly benefits AMD financially and vice versa. It kind of locks them together strategically. AMD's very motivated to keep OpenAI happy.
And the market saw that alignment pretty clearly. AMD shares shot up, 30%?
Up to 30%, yeah. While NVIDIA, the competitor, dipped about 1%. It just shows these supply deals are now huge market-moving events. They're central.
And it wasn't just hardware. OpenAI's Dev Day showed they're pushing hard on the software side, too, trying to become indispensable.
Totally. Making their platform the place to be for developers.
They weren't just rolling out features. They were showing how AI can be woven into, your everyday work tools.
Exactly right. Look at the new app SDK. It lets other apps, Figma, Canva, Coursera, where examples run tasks inside a ChatGPT chat.
Ah, okay, so ChatGPT isn't just for chatting anymore. It becomes kind of a command center.
Pretty much. A workflow orchestrator. And you saw the impact immediately. Figma's stock jumped 7% just from that onstage demo.
Wow. Just a demo moving the needle that much.
Yeah.
Shows the pull of that ecosystem.
And they also rolled out things like AgentKit helps developers build specialized AI agents faster, and ChatKit for embedding chat easily. Plus, Codex, their coding agent, is now widely available. The message is clear. AI isn't a separate thing. It's meant to be the layer everything else runs on.
And the big companies, the enterprises, they're definitely getting that message. Look at Anthropic, one of OpenAI's rivals, landing that huge Deloitte deal.
That's a massive deployment. Anthropic's Claude AI going out to over 470,000 Deloitte people globally.
150 countries.
Yeah. And what's interesting is how Deloitte's doing it. They're not just giving everyone a generic chatbot. They're creating custom Claude personas.
Personas, like for different jobs.
Exactly. Tailored for accountants, for developers, whatever the group needs. It helps with specific tasks, makes it more useful.
So it's partly internal efficiency, but I guess also about showing clients they know AI. Establishing credibility.
That's got to be a big part of it. You have to practice what you preach, right? Especially when advising on AI strategy.
Yeah, makes sense. But even with all this excitement and huge valuations, it's not all smooth sailing, is it? That Cerebras story is a bit of a reality check.
Oh, absolutely. The AI chipmaker, right, raised $1.1 billion, valued at over $8 billion, and then they pulled their IPO filing.
Just hit the brakes.
What? They basically said the AI world is changing so incredibly fast, they needed to pause, redo their numbers, update their strategy before going public.
So even with huge funding in the hottest sector, the ground can shift under your feet that quickly.
Apparently so. It tells you that the path to market, even for core AI players, is super volatile right now. The window can just slam shut.
That volatility is actually a good transition.
Yeah.
While AI is forging these new, maybe speculative paths, the older guard, traditional corporations, they're busy consolidating. Let's shift to corporate strategy, M&A.
Okay. Yeah, we saw a pretty big move in regional banking. Fifth Third Bancorp is buying Comerica. $10.9 billion, all stock.
Right. That merge creates the 9th largest U.S. bank, around $288 billion in assets.
And analysts are looking at this and saying, okay, this might be the start of a wave. More regional banks could merge.
Why now, though? What's the trigger?
A lot of it seems to be about feeling more comfortable with the regulators. The term being used is a more bank-friendly regulatory environment. The CEO of Fifth Third even mentioned that confidence in getting quicker merger approvals was a factor in their timing. Less fear of getting bogged down for years.
Okay, so perceived regulatory ease plus the usual drive for scale and efficiency. Makes sense. Speaking of efficiency, let's look at Nike. They're in a bit of a turnaround phase.
Yeah, and their CEO, Elliott Hill, was pretty blunt about it. He said getting back to profitable growth will take a while. And it's not linear, no quick fixes.
Then the big shift is backing away from that huge push into direct-to-consumer, the D2C model, right? Going back to wholesalers.
Exactly. It's a major reversal from the previous strategy. And it suggests that for a brand as massive and global as Nike, going fully D2C is maybe just too complex.
How so? You lose the middleman margin,
But you inherit everything else. Global inventory, local logistics, predicting demand everywhere. It's brutal. The sources suggest they just couldn't keep popular stuff reliably in stock everywhere. Wholesalers are actually really good at that part.
Interesting. And they're also restructuring internally, not by gender kids anymore, but around specific sports.
Yeah, trying to get innovation flowing again. Focus on running, basketball, soccer, etc. The idea is to tailor products more closely to what those specific athletes need, rather than a generic men's or women's innovation, trying to sharpen that edge they felt they lost.
But they're facing headwinds, too. That new tariff forecast is pretty significant.
It's huge. They're now expecting tariffs to cost them $1.5 billion this fiscal year.
$1.5 billion. Was it projected at $1 billion just a few months back?
Yep. An extra $500 million hit, that's going to bait into margins, no question. Shows how tough managing a global supply chain is with all the trade friction.
Okay, switching to the consumer view, there seems to be some optimism, especially for entertainment. Box office looking up.
Yeah, projections for the 2025 domestic box office are pretty strong, like $9.1 to $9.2 billion.
Which would be the best year since the pandemic started.
Yeah.
Better than 2023.
Exactly. Beating 2023's $9.05 billion. And the hope is pinned on what they're calling a late-year trifecta.
Ah, yes. The big three. Wicked, Zootopia 2, and the next Avatar.
That's the trio. Huge franchise films, guaranteed mass appeal. They're counting on those to really power the end of the year.
And just one more quick hit on the consumer creator side. Instagram's new award for creators.
Ah, the Rings Award. Yes, a literal gold ring, a badge on your profile.
Right.
But no cash. That's the kicker, especially since Meta stopped its cash bonus program for Reels last year.
Right, so symbolic recognition, but not actual payment. Meanwhile, YouTube's bragging about paying out billions.
Over $100 billion over 4 years, they reported. It really highlights that tension for creators. Platforms want your content desperately, but sharing the ad revenue, that's still a fight.
Okay, so we've covered the AI boom, corporate moves. But now we absolutely have to loop back to that disconnect we started with. All this market excitement happening alongside serious political problems.
Yeah, it's easy to get swept up in the AI hype or the M&A deals, but the U.S. government shutdown is real, it's in its second week, and the impacts are becoming tangible, not just theoretical anymore.
Like air traffic controllers and TSA agents working without pay.
Exactly. Over 13,000 controllers, 50,000 TSA folks. They have to work, but they're not getting paid. And the FAA was already short-staffed on controllers by, 3,500?
That doesn't sound sustainable.
Not at all. How long can you run critical systems when the people running them are getting paid?
And there's a key date coming up that analysts are watching.
October 15th. That's payday for 1.3 million active duty military members. Goldman Sachs flagged this as the likely forcing event.
Meaning if the shutdown continues past then, and the military doesn't get paid?
The political pressure becomes immense. Public anger, real hardship for military families. It gets much harder for Congress not to find a compromise.
And it's not just personnel. Actual programs are getting hit. That essential air service subsidy.
Yeah, that's critical for rural areas. Funds flights to 177 smaller communities. Those subsidies could expire as soon as Sunday.
Cutting off vital links for those places. Trade, medicine.
Exactly. Shows how fast the D.C. stalemate hits Main Street.
And meanwhile, other political shifts are making waves globally. But Japan's market reacted strongly to their leadership change.
Oh, yeah. The Nikkei index jumped over 4% to a record high. That was after Sanai Takachichi won the LDP leadership race, putting her in line to potentially be PM.
And the market liked her expected policies.
Loved them, apparently. She's expected to keep monetary policy easy, low rates, but also push for big government spending, fiscal stimulus, trying to juice the economy.
But that combo created some weirdness in the currency and bond markets.
It did. The yen weakened, going past 150 to the dollar. That's a key psychological level. But at the same time, Japanese government bond yields went up.
So stocks like the stimulus idea, but the bond market doesn't.
Basically, yeah. Equities see growth potential. The bond market sees a flood of new government debt coming to pay for that stimulus and worries about inflation and supply, so yields rise. It's a split verdict.
So putting this all together, the AI speculation, the corporate deals, the political instability, how are the big investors seeing this moment? Paul Tudor Jones had some pretty pointed comments.
He did. He said the whole setup, the speculative frenzy, the tech dominance, how fast things are moving, it really reminds him of late 1999, right before the dot-com bubble burst.
And he pointed to specific things, like circular deals in AI.
Yeah, circular deals are vendor financing, echoes of questionable deals back in the dot-com era, things that made him deeply nervous was the term he used.
But is he selling everything? Getting out?
See, that's the tricky part. No, he thinks the bull market could still have a massive rally left in it before a potential blow-off top.
So ride the wave, but be ready to jump.
Kind of. His point is you almost have to stay invested because historically the biggest gains often happen right at the end in that final, maybe irrational phase. But you need extreme caution, extreme discipline.
Which brings us right back where we started. This incredible split, huge tech momentum, record markets, alongside a government that literally might not pay its soldiers next week.
The market is absolutely choosing to ignore that political risk. For now, focusing laser-like on the AI growth story. But as Jones hints, that AI story itself isn't without risks, complex tech, sky-high valuations.
So for you listening to this, trying to navigate, it's tough to reconcile these forces.
It really is. And maybe we can leave you with a thought that captures that conflict. Peter Lynch, right? The legendary investor, famous for know what you own.
Deep understanding.
He recently said he owns 0 AI stocks, and his reason. He admitted he literally couldn't pronounce NVIDIA until about 8 months ago, so he can't follow his own core principle for that sector.
Okay.
So the question for you is, how do you balance that traditional Lynch-style wisdom, really knowing what you own, with this current market? A market that's pricing in world-changing AI growth, seemingly irresistible momentum, the kind Paul Tudor Jones warns might precede a 99-style blow-off. That's the puzzle today. Deep knowledge versus maybe unavoidable speculation.